1, 2, check, check. Hello, 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 hello. Hello, hello, check 1, 2. Hello, hello, hello. Hoping that you can hear me. Sometimes people say they don't like that, but it's kind of a way to kill the time. I guess I make up for it by doing a what do you call it? I do um, a beatbox, right? I am trying to see if I can get on camera for my what do you call it? My Zoom. If I cannot, if you don't see my camera, then unfortunately you're gonna have to kind of just, I guess, deal with the fact that you can't see me. Uh, Actually, you might see me now. I should just turn the camera on, and I am. All right. All right. You see me? Thank you, Megan. As you can see, I am in my office. Cloffice is what we call it. And I want to make sure that you saw the flag because I am representing the VA loan and veterans and such. I am going to add you guys as panelists. Of course, you don't have to be a panelist if you don't want to be, but I'm going to add you as panelists so you can ask questions anytime during this presentation, okay? And I am streaming on StreamYard. And I'm going to try to share my screen on StreamYard so I can see, so you guys can see it. So I'm gonna go ahead and do that right now. I'm gonna share my screen, and I'm sharing this screen here. Now, hopefully, my audience can see my Zoom, and I also plan to share my screen because I have my presentation here. Okay. So I'll put my presentation here in the background, and I'm going to put in presentation mode. And I'm really bad at what do you call it? PowerPoint. I like to use what do you call it? Canva. I like to use Canva, right? But let me go ahead and see slideshow. Let's start from the beginning or from current slide. Now I'm going to go back to my Zoom, and I'm going to share my screen on Zoom. Do you guys see my presentation, Megan and Margaret? Perfect. All right. Okay, great. So I really appreciate it. I just need to do a couple more things. I'm trying to stream to multiple locations. So I'm going to copy this and I'm going to share to a couple of more places that I needed to be at. I did a lot of automation, and we're gonna talk about this later. But I did a lot of automations where, like, if I did a stream, it actually shares to like 10 different places, right? But I have to have admin access. I have to be able to, um, you know, actually share directly to the page using Zapier or whatever. And I wasn't able to do that um, in some places that I'm trying to share in. So I'm gonna do that manually, which is not ideal, but it is what it is in terms of my intentions. I will try to fix it. I did try to fix it earlier. It didn't quite work out, and I was like, well, you know what? I can't wait. I'm just gonna proceed. I'm gonna move forward and just get this done because I have a schedule I'm trying to reach, which is posting every single week on Wednesdays. I didn't do it last week. My excuse was my kids were home, and I just didn't think it would be conducive to try to do live streams when the kids are running around. All right, cool. So to the presentation. If you don't hear me, if there's issues, whatever, please raise your hand or comment, or you can what do you call it? Unmute yourself and let me know. If you are on Zoom right now, and let me see here, I'm going to make sure that if you do join, if you are in if you just join the room, I'll try to add you as a panelist. All right, so serving those who served. As you guys may know, I am very proud to be a certified veteran mortgage advisor, um, and I'll get into why. I'm really passionate about it, but I'm very proud because I think that the veteran community is very underserved and misunderstood, right? And not that I'm going to change the world, but if I can change my market or change my sphere on how they view the VA loan and veterans, then I felt like I did my duty, right? And plus, there's a lot of opportunities there. I think I read somewhere a while ago, statistically, out of uh, 100% of veterans who qualify, meaning they qualify to buy, only 10% of them are actually using the VA loan. So what I mean by that is, if there's 100 veterans in front of you that qualify, only 10 of them are actually using it. So there's 90 people who qualify as a veteran for the VA loan, but they're not employing their opportunities and their abilities to buy a house. And I think that's a problem. I think if you qualify, you should be buying, right? I mean, maybe I'm biased because I'm in the industry, but I think owning is better than renting in general. I mean, at least for me personally, I enjoy owning better than renting, right? So I think if there's 100 veterans out there who qualify, but only 10 of them are using it, then those 90 people, they're just not being reached, or they're not being informed, or they just don't know, right? And I think that if we had a conversation with all of those veterans, more than 10% of those would actually be homeowners, okay? So again, that's one of the reasons why I'm passionate about it. My information, LLE at VanDykeMortgage.com, 832-606-2193. You always ask me later or Google me. You can probably find my information literally if you Google me literally in Dallas or Texas or Frisco. Frisco is actually the suburb I actually office out of. Okay, so next slide. And I'm going to minimize this real quick. I'm a certified veteran mortgage advisor and a branch manager at the Larry Lee team at Van Dyke Mortgage. I'm a licensed loan officer since 2016, which feels like it was yesterday, but it's been a while. Sometimes I forget. I made a mistake. I said my wife was only in the business for 2 years. She's like, 5 years. I'm like, wow, really? So yeah. I also have a side hustle as a social media marketing coach and running my own ad agency, Robots LLC. The reason why I bring that up is because I have a passion for social media, and I'm hoping that the combined passion of me wanting to serve veterans and social media will get the word out. So I appreciate people who attend these classes, and I would love it if you were to share it with people that you think can benefit from it, especially if it's a veteran or maybe a fellow real estate agent. Okay. I'm licensed in 11 states: Arizona, California, Florida, Illinois, Indiana, Louisiana, Michigan, New Hampshire, North Carolina, Tennessee, and Texas. And my MLS license number is 1440741. The reason why I'm telling you my states is because I can answer any questions for anybody. I don't care what state you're in. I don't care if you're an agent or a client. It doesn't matter to me. Just a few things I cannot do. So just disclosure, those states I can quote rates and such. But other than that, I can give you information about the VA loan and how the VA loan process works. But I can't go too much further than that. Okay. My mission, and I know this long, but I'm going to read it, right? And the reason why I wrote it out because I couldn't memorize it. So my mission is, I love the mortgage business, but I was fed up with the lack of education and information clients were provided during their application process. So I created a first-time homebuyer coaching class that provides instant access to answers to questions and simple explanations to the mortgage process and how to qualify for mortgage clients, as well as one-on-one coaching. This presentation I'm doing is an effort to do that. I'm trying to create content for veterans, right? So that's why we're on this call, because I'm actually literally trying to create information that they can look up and find and consume on their own without having to deal with an actual loan officer. Unlike other loan officers, I made it my passion to coach first-time homebuyers on the mortgage process, and that makes all the difference. And how I have helped hundreds of people get on the right path to home ownership, and many of them are now homeowners. You remind me of many of my smart, successful, and savvy clients who are now homeowners because you are taking the right step to the home purchasing process like they did, meaning you're on this call and you are watching this video, right? The home buying process is very confusing to most people, but that is why I am here, to simplify and make sure you're 100% prepared in the home buying process before anyone else. And when I say anyone else, I'm talking about your competition who's actually trying to buy houses as well. Okay. Um, Again, I'm a certified mortgage advisor. I'm very proud of it. And it's one of those things where I take it very seriously, right? So, if you follow me on social media and you see the kind of posts I make, I'm really, really kind of, I try to be humorous. I try not to be serious. But when it comes to the VA loan and veterans, I'm very serious, okay? So you're kind of getting a different side of me today, right? My why, of course, my family, my wife and my kids. I call my sons the Lee boys. Specifically, my why is going to be Hunter and Bruce. As you can see, Hunter's the one that's kind of pictured with the crazy looking face, and Bruce is the one that's pictured with me, because they're on the spectrum for autism. So my goal or my intention is to generate enough resources so I can provide therapy for them. Okay, so that's why I'm really motivated to help people, because it's going to help my family. I'm also, my why. I'm very big on veterans in general, and I'm going to tell you specifically why for me. Okay. I made this post on social media, and it was one of the most popular viral posts I ever made. And it's a very serious post because it's not very normal of the kind of post I post. I usually post on Facebook, but this is what it says. My father was living in Da Nang, Vietnam during the fall of Saigon, and my mother lived in Saigon. My father left by helicopter and my mother by boat. It was U.S. soldiers who helped them get into the helicopter and on that boat, which are more than likely U.S. military ships. They met in Hong Kong, China, and if it wasn't for U.S. soldiers, my parents may have not survived, met, and had me. And I wouldn't have what I have today. I might not even exist. And those U.S. soldiers, probably a large majority of them, are veterans now. So thank you, vets. I owe you my life. So basically what I'm saying is that I would not be alive if it wasn't for the U.S. military, who are now veterans. So I owe a debt of gratitude to the U.S. military and the veterans. And a lot of those young men and women were helping my family, not knowing what kind of impact they were making, right? So they were just following orders for the most part, right? And they basically created life, like people like me and my wife and my kids. So again, if it wasn't for the U.S. military, who had a direct impact on my mom and my dad meeting, I wouldn't exist. Okay, so that's my why. So what is a VA home loan? A VA loan is a mortgage guaranteed by the U.S. Department of Veterans Affairs and is issued by a private lender, such as a bank, credit union, or mortgage company, like the people I work for. Okay. The benefits of a VA home loan is there's 100% financing. There's no private mortgage insurance or PMI, which you might find in other mortgage products, such as the conventional loan or the FHA loan. There's no loan cap limit. Basically, you can borrow as much as you want. Of course, within qualification, the veteran themselves have to qualify, but there's no actual number. I don't know if a lot of you guys have been paying attention, whether you're a real estate agent or a client thinking about buying, but the loan limits for conventional or conforming loans were increased last year, and it was a really big deal. Well, us in the veteran mortgage business, we're like, well, that's kind of funny because we don't have a loan limit for the VA loan. So, not that we were looking down on it, but we're like, big deal. We have no limit. And of course they have lower interest rates, which is normally the case whenever I take a look at these clients' applications. Okay. How to qualify for a VA loan. And, I'm going to read these all, but I can actually, be a little bit more specific in need. Okay. But a veteran is eligible for a VA home loan if he or she served on active duty in the Army, Navy, Air Force, Marine Corps, Coast Guard, or after September 15th, 1940, and discharged under conditions other than dishonorable after either. Serving on active duty for a period of 90 days or more, any part which occurred during wartime, or serving on active duty for a period of 181 days or more during peacetime. Serving on active duty under Title 10 and Title 32 orders for a period of 90 days, with at least 30 days being consecutive. And of course, you can also serve 6 good years in the National Guard or Reserves with 16 points and receive an honorable discharge, which is a lot of kind of grainy details. And sorry about the typos here, but there's a lot of grainy details. But basically, there's a requirement of the amount of service and the type of service that you provided as a military, someone part of the military, and it really depends. So it's really hard to kind of nail down, and be able to know everything in a short class or short conversation. But it's worth kind of noting what to expect, right? So that's the reason why we listed this. But of course, if you want to know for sure, it's better to just speak to your local lender. Okay. Certificate of Eligibility, or COE, is what we like to call it. This is the document from the VA that confirms your eligibility for a VA home loan. It's obtainable through e-benefits or directly from the lender. Okay. The documents that you need in order to obtain the COE is you have the active duty statement of service, current orders, or active duty veteran, a DD 214, which is like discharge paperwork. National Guard is NGB 22 and NGB 23, and reserve statement of service and point statement. Again, this gets a little granular and a little detailed, and it really depends. So it's a case by case basis, because again, there's different departments in the military, so it's kind of different for each individual. So again, it's better to just speak to your local lender and kind of ask them based on your current situation if you qualify or not, or what you need to qualify in terms of the documentation and such to get the COE. Okay. Tier 2 entitlement. So this is something that a lot of people in the community kind of question. They're not sure. And also clients I speak to also kind of bring this up, right? The question is, can I have more than one VA loan at a time? The answer is actually yes. Okay. What we do is we calculate the remaining entitlement based off of your COE and determine the max loan amount with zero down. So basically, it's not that you can only use a VA loan once. It's just a matter of how much of your entitlement you have left, which requires just a review of your COE or certificate eligibility. Okay. So the answer is yes, but there's a chance that even though you have the ability to buy 2 homes, you might not have enough entitlement to do so. So again, we have to review your documents. Okay. Can the loan amount be higher than the maximum loan amount determined? Yes, but a down payment will be required. Okay. The next question is, can I apply for a VA home loan after foreclosure? The answer is yes. The 2-year waiting period before a veteran can be eligible. It's a 2-year waiting before a veteran can be eligible again. Entitlement from home that was foreclosed on will not be restored. Now, there's also sort of a case-by-case basis depending on which lender you talk to. They call it extenuating circumstances, where like if you were in foreclosure but there was an extenuating circumstance that must be documented, then we might be able to shorten that wait period. So again, it's something that you must speak to your local lender about. The funding fee. It's a first-time use. It's for the zero down. It's 2.3% of the total loan amount. Okay. For example, if it's a $500,000 loan, then you're going to look at about $11,500. Okay. And subsequent use, that means if you were to use the VA loan subsequently, then it would be 3.6% of the loan amount. Okay. For example, if it's a $500,000 loan, then you'll be paying $18,000. Okay. Now, the part that is interesting to me, or the part that I like to emphasize, because a lot of people don't realize this, is the funding fee is waived for service connected or service related disabilities of 10% or more, or someone who is a Purple Heart recipient. And there's actually a list that I was looking at earlier that I can provide. But basically, if the veteran, you yourself, or maybe someone you're married to, or your client has any kind of disability, it's worth taking a look to see if their funding fee may be waived, right? And if the disability claim is filed prior to the loan closing and the claim is awarded at 10% or higher, the VA will refund the entire funding fee. Okay. Now, joint loans, and this is something that I am embarrassed to admit that I've messed up in the past, meaning I had clients who are veterans and they want to buy a house with, say, a fiance or a boyfriend or a girlfriend. And I literally just said, I cannot help you with that. Like you have to be married in order to qualify. And I've now found out because of my certification and the training that that's not true, right? And it's funny because I speak to loan officers who definitely have more experience than me, who definitely know more than me, and they would have agreed with my initial thoughts, meaning you can't do that. You can't buy using a VA loan if you're not married. Meaning you can't be both together. But then, like now, I have a little bit more knowledge than they do, or I know something that they didn't know, which is kind of cool. So, joint loans, okay. It's a loan other than a veteran and a spouse. So, like I said, veteran fiance or a veteran relative, right? It requires prior authorization from the regional loan center, which we like to call the RLC. They're kind of like the people who sort of they can make exceptions for your loan, right? They can look at your structure or look at your scenario and sign off on it, and therefore give us the documentation we need in order to get it passed through underwriting. Okay, so it's kind of cool. It's kind of like they're I wouldn't call them underwriters or like that, but they're like people that can help grant exceptions. But there's a down payment required, and the way I was explained is if there's a veteran and a non-veteran, then the veteran would be able to buy the house with 0% down, but the non-veteran would have to provide a down payment, and the funds would have to be sourceable on their side, right? At least that's how I was explained, right? It says a veteran and a fiance who intend to get married prior to closing will not be treated as a joint loan. Title must be held as veteran and spouse. And the income strength of a non-veteran cannot compensate for the income weakness of a veteran. So what that means is, let's say the veteran makes no money. There's nothing there, right? And you're trying to add a non-veteran or non-related spouse or a non-veteran buyer because they make all the money. That won't work. Okay, the veteran would have to be able to carry their part of the liabilities, or what they call the DTI, right? They would have to be able to carry their part of the income as well as the joint borrower, right? And it gets a little sort of detailed. So if you are interested in something like that, or you want to know more about it, please let me know. And of course, I'll help figure out the answers if I don't have it already. But it's something unique and I'm not really familiar with. In fact, I've never done a loan regarding the joint loan yet. It's new information to me, but I'm very excited. And I've actually spoken to clients about it because there are a lot of veterans out there who aren't married, but they want to be on the loan with someone else, right? So it's kind of a cool feature that I learned, right? Let's see here. Before I move on, I am just checking to see if there's any questions. No questions. Oh, and there's another participant. I'm going to allow her to talk. Promote to panelist. Okay. All right. Thanks for bearing with me as I do a little bit of house cleaning there. So the VA loan, there's the traditional mortgage, which is the 30-year, 20-year, or 15-year fixed like purchase loan, right? There's a cash out refinance where you can pull up to 100% of your home's equity. Pricing is traditionally higher, anything above 90% LTV, as in loan to value, or if you're borrowing more than 90% of the value, right? So let's say the house is worth 100,000 and you want to borrow 95,000, then the rates or pricing is going to be higher, but you can pull up to 100%. Okay. We call this the EARL. It's kind of a joke, right? How to spell it, right? EARL, whatever. But it's IRRL, as an interest rate reduction refinance loan. And that's why it's such a big deal that you spelled it correctly, because it really is exactly what it is, what it's describing. It's an interest rate reduction refinance loan. Okay. It's a streamlined refinance. It's limited documentation and no appraisal required. So it's a really cool product, especially if you are a veteran that's a homeowner, and you're just looking to lower your rate or whatever, and just to see how it would look like. It's not as painful, I guess, so to speak, than your typical refinance. Okay, and this one I actually just learned about as well. I don't do very many renovation loans or construction loans, but we attended class, and they were explaining how this is a huge possible benefit to clients who are looking for houses that are hard to find, and they're needing a certain type of addition or a certain type of house. The renovation loan can make that house that's not quite there their dream house, right? It's the like I said, the renovation loan is similar to the FHA 203K. It allows the borrower to finance purchase price and home repairs. You must have documentation provided by the licensed contractor, of course, and interest rates are traditionally higher with this product. But again, it makes sense if you have a particular need and the market is not providing you what you're looking for. You can go out there and build it using the VA renovation loan. Okay. Now, before I actually end this, I want to add another thing that I thought about that a lot of people probably don't know, right? The VA loan can also be applied to condos. Okay. And this is something that is new to me, and I've been kind of excited about it because I know that condos is kind of, it's a hit or miss when it comes to does it qualify, FHA or whatever, and you're thinking FHA, VA, they're the same. Well, it's not, it's actually not the same, right? So if you look at a home and it's a condo and it says cannot be financed FHA, a lot of people assume, well, that means it can't be financed VA, and that's simply not the case. Again, the VA and FHA are two totally different entities, and they have different, I guess, reasons as to why a home or a condo would be, financeable or not, right? And there's a process that you can actually follow to see if you can get a condo approved for the VA. And what we have been saying, which is why it's interesting to me, is if you look at a property and you see that it's not, VA approved, it might not be because the VA denied it. It might be because it never went through the process, meaning no one submitted this condo to the VA to see if it's approvable, right? And the great thing about that is once it's approved by the VA, it's pretty much approved for life. Okay, the life of the property. So I think that is worth considering, especially if you're looking for different types of options other than a typical detached property, right? So hopefully that is information that is beneficial to you. The VA home loan is a loan other buyers can only dream of obtaining. You've earned the right by serving our great nation, and it's my job to facilitate your dream of home ownership. And of course, I want to thank every veteran for their service, and I also want to thank anybody who helps support the VA loan and people purchasing, who are in the veteran community. Now, I'm going to give a quick bonus. I guess trivia, right? A lot of people think that if you are married to a veteran and they were to, pass away, there's a chance that you might not qualify. Well, it depends. If it's service related, then yes, there's a chance that you can qualify. Now, if you were to get remarried, and this is the trivia part, then there's a chance that you might not qualify anymore unless you hit a certain age. I think the number is 62. Maybe 62, 52. I forgot what the number is, but I'll figure it out, and maybe we'll talk about the next class. But apparently, it is really weird if you were married to a veteran and they passed away because of a service-related, death, or that's the reason why they passed away, then you qualify unless you remarry. But if you remarry, but if you're a certain age, like you have to get old enough, right? Then you can qualify for the VA loan again, which is really interesting to me. So again, we might talk about that. Now, before I end, here's my information. Does anyone have any questions, regarding the VA loan or what we discussed, or VA loans in general? If it's a question that I can answer, I'll answer right away. If not, then I'll do some research and I'll come back and provide you the answer. But yeah, does anyone have any questions? And I'm going to go ahead and yes. Okay, so that's exactly the question that I was hoping to get, right? That's the kind of question that, I mean, you're literally asking about the scenario. So to answer your question, most lenders, I've done this, would say you must be married in order to be on the loan together. Because obviously you're gonna live in the house together, whatever, right? You want to share income, whatever, right? But the answer to that is now not correct, right? And actually, you know what? I'm going to go ahead and just share that slide again so we can kind of review it. It's called the joint loan, okay? Which again is it's interesting to me. Um, it's basically the way I look at it, and I don't know if this is correct, but it's like having two loans. You know what I'm saying? To buy the same house. Okay. You have the VA loan just for the VA for the veteran side, and then you have like a normal loan. I don't even know what I call it normal, but I can't call it a conventional. I can't call it FHA. It's just it's like a VA non-VA loan, right? A VA loan for non-veterans, right? But you're basically having two loans. Okay. And when I asked this question, and I was trying to get research on it, um, it's just a matter of the person on the non-veteran side have to do something different in order to qualify. They have to put a down payment. They have to pay. Let's say the veteran is exempt from the funding fee because they're disabled. Well, the non-veteran would still have to pay a part of that funding fee, right? I think the number was like 12.5% or something like that. They have to put down. Um, so when I did the math, I was like, okay, well, if they are if they're married, then it might not be beneficial because the veteran is better off just buying the house on their own at zero down, right? Because the fiance would have to put 12.5% down or whatever, not down, but they would have to have that much in order to bring to the table for closing costs and such. But mathematically, it might not make sense, but also might be beneficial. It depends, but it must be authorized by the regional loan center. So what you would do is you would have both applicants and you would actually structure the loan based on the numbers that I'm telling you, and then you would submit it or send it to the regional loan center, and they would have to basically endorse it. They have to be like, yeah, this can work, you know. But it's a way that both people can be on the loan, and why would you want to do that? For the most part, income. That's what, from my perspective, right? And my perspective is the reason why you would want both people on the loans because you want to have both income so you can buy more house. Okay, because of course, if the veteran could qualify on their own, income wise, then why would you even bother adding another person to complicate things, right? If the veteran themselves can qualify in terms of income, that's it. There's no more need to complicate it. But obviously, normally you would do this because you're trying to buy more house than the veteran can carry on their own with just their income. So it makes sense in that case. So it really depends, but yeah, you can do that. Like I guess the quick answer is there's a possibility that your client who's a veteran can buy with a girlfriend or a boyfriend or fiance or relative. So yes, that's what the joint loan is. Did that answer your question? Hopefully. It's still one loan. It's just the requirements are different. Yeah. Now I think that's similar to how it works, right? Like if he can pay for his part and they can pay for their part, then you can combine it together. That's why I'm thinking that's why I call it joint loan. I've never structured a loan like this before. Okay, so I don't know all the details, but the way it's presented, that's what it sounds like, right? And Margaret, I'm glad you're asking this question because I actually might make that my next class. Because now. Mhm. Well, see, that's the part that I'm not sure, not 100% sure, because if you look at the slide, it actually says income strength of the non-veteran cannot compensate for the income weakness of the veteran, right? So I think it, yeah, yes, yes, I'll find out for sure. But yeah, I think like let's say again, it's a 400,000 house, and the veteran only qualifies for 100,000, and the non-veteran qualifies for 300,000. That might not work out. I don't know for sure, right? Based on reading the guidelines, if I saw this income strength, the non-veteran cannot compensate for the income weakness of the veteran. I would think it has to be at least 50-50, right? Like they would have to basically split, be able to cover half, as a partnership, or the veteran might be able to cover more, right? So let's say it's the veteran can cover 300,000, but they want to buy a 400,000 house, so the girlfriend or boyfriend adds the extra $100,000 qualification or buying power, right? Then I think that would work out. So I think that's how it works, but I want to make sure. So again, this not, it might end up being like my next class because again, yeah, because well now you're making me feel like I need to know the answers. So yep, yep, and that's the goal. That's the goal. So yeah, either if it's not the next class, it will definitely be a future class. So I will let you know. And of course, when I find out directly, I'll let you know directly. Of course, Margaret. Awesome. No, I really appreciate that question. That's a great question, and I think it's relevant. I think if more of us in the real estate industry, more lenders and real estate agents knew about this and know exactly how it works out, we probably can open up the buying potential for a lot of our clients. So I think it's a very useful piece of knowledge to know. So I appreciate you asking that question. Sure. I'm not licensed in Virginia, um, but I do know people who are, and some of them are just as good as me or better as loan offers. So if you do need help in the Virginia area, I can definitely refer someone. Nice. Yeah, and I'll still talk to anybody. Let's put it this way: anyone who's trying to do good or do better for the veteran community, I'm always one to connect with. I don't care if we work together or not. It's I want to be part of that environment and that network. So you can introduce me whoever you want, boss. I appreciate it. All right. So does anybody else have a question? Okay, go ahead. Hmm. 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 Yes. Yes. Hmm. Yep. Well, I'm glad you chimed in, and definitely part of the conversation that I need to look into, right? Because there's so much beyond just the joint loan that needs to be considered when you have someone who's a non-veteran on the loan, whether it's a joint loan through a fiance or whatever, or whether it's a spouse. I'll kind of give you guys kind of a cool little a piece of information that I learned when I went to the conference that we had. Um, and I might misquote this, and we like to call it not doing public math. We hate doing public math, but apparently, when there's alimony in a divorce situation, right, for a veteran, um, you know, a lot of structures are viewing that alimony as a liability, right? As something that you have to pay on a monthly basis. So it hits your debt to income ratio or DTI, right? Well, the way the VA can treat it, and I think they call it separate maintenance. They don't call it alimony; they call it separate maintenance. Which the terminology is also another thing when it comes to the VA loan, which is a whole nother class, right? But separate maintenance can be considered not a liability but a deduction from your income. So what I mean by that is, let's say you have a liability section and you have an income section, right? And you have separate maintenance. Well, in most cases, separate maintenance would be called alimony. You would actually add that to the liability side, right? But the VA, I believe, and hopefully I'm saying this correctly because I might be wrong, but this is what I remembered. The VA will actually treat that liability as a deduction from their income, so it takes away from the income. Why does that make a difference? Well, adding it to liability actually impacts the debt to income ratio more. Like when you do the calculations, adding it as a liability actually lowers the buying power more than if it were to be taken away or subtracted from the income, right? And again, we don't like to do public math, and I'm gonna have to go back and do my research. But I learned that, and it was really interesting to me. Fortunately, I guess I haven't been able to work with a veteran who's divorced or has alimony yet, because that class was less than 6 months ago, right? So I haven't had a chance to work with a veteran yet in this situation. So I need a chance to really dive into it, but that's what I was told. And it was really interesting to me that the VA would treat income differently and death differently when it comes to like alimony or, like I said, separate maintenance, right? So there's lots of details that the VA treats way differently than your normal conforming loans. So yeah, I mean, we could probably teach a whole class, multiple times on just the spousal part or the joint loan part or the co-borrow part of the VA loan, because obviously it involves a veteran and a non-veteran, which is really where a lot of confusion is at. So appreciate you chiming in on that, Stacy. Um, does anybody else have any questions or comments? And I know a lot of you guys on StreamYard who are watching this through Facebook or YouTube might not hear the questions. If you don't, I apologize. I'm trying to fix that. But just so you know, she was just kind of chiming in on the fact that she is married to a veteran and she was able to be a part of the loan, even though they're not officially married on paper. Maybe they are, but she was saying that because of taxes, the way taxes were done, she was considered married to him, so she was able to be on the loan. So, uh, so yeah, that's good information. All right, let me check here to see if there's any other questions. No questions in Zoom. Let's see here if there's any questions anywhere else. All right, so it doesn't look like there's any other questions. Anyone else want to chime in or ask or say something about what you learned today? Maybe we can share your biggest aha for this class. Oops, are you guys already gone? You guys already ghosted me. I'm not looking at you guys, so I don't know. Let me go ahead and unshare here. Yeah, you guys are not showing your camera, so I have no idea if you're there or not. Okay, well, okay, well, do you want to share like a win or aha based on what you learned today or what you saw today? Yep. No, it's true. It's true. There's a lot of veterans out there that have reached out to me that wants to purchase, but they're not married, but they're dating someone and they're thinking about adding that person. Again, call me a year ago, 2 years ago, I would have been like, yeah, I can't add your fiance. I'm sorry. So I was really excited when I talked to someone recently who they were the actual girlfriend. They were not the veteran. They're the girlfriend saying, hey, my boyfriend's a veteran. We want to see if we can get the VA loan. Is that possible? And it was so awesome for me to be like, yes, it is possible. And let me explain to you how, instead of saying automatically, no, you can't because you're not married, right? Because that's literally what the answer would be before I got the certification, before I learned about it. So it's a really cool uh, feature, a cool piece of knowledge about the VA loan that I'm excited to explore and learn about. So, and I actually talked to my marketing person before I got on this call. I was like saying the way I'm going to do these classes is something that's going to be asked or talked about in the current class is what's going to stem or lead to the next class. So that's probably going to be what I'm going to focus on as the joint loan. So I really appreciate us asking or talking about that because it's going to help me already create next topic for the next topic for next week. All right, so I don't plan to have these calls very long. My goal is to maybe present for like 15, 20 minutes at most, 30 minutes, and then do a Q&A and then be done with it. So if we have nothing else to talk about or any questions to ask, I really appreciate you guys being on this call, and I'm going to let you guys go with your day. And if you do have any follow-up questions or, maybe a veteran that you want me to talk to, I would love an opportunity, and I would be honored if you were to do that for me. So either way, I really appreciate you guys being on this call, and I will talk to you guys next week. See you guys later. Thanks. No problem, guys.